Hello everyone and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, Phil, it says at the top of my show notes that this is episode 59, series 10. So we're motoring through this year, aren't we?
We are, and the year is certainly motoring through as well, Curtis. We're now at the end of September, moving into obviously the fourth quarter now. It'll be, obviously everybody's eagerly awaiting, obviously, when we get the September performance results out, which we will obviously report on when we do get those in the next week or so. But yeah, September is well and truly gone and heading towards that the wintry, more autumnal period. But you're heading off to warmer climates, aren't you?
I am indeed, yes. Yeah, I don't want to rub it in, but I'm heading for the sunshine on Sunday. So looking forward to that, especially as I'm looking out of the office window at the moment and it's absolutely chucking it down with rain. So won't be missing that. But a big shout out to Carl Davis, industry consultant and friend of the pod, who's going to be sitting in for me next week.
He is. He enjoys it. So So next week, yes. So Carl will be joining me on next week's headlines, and hopefully we'll have a Menable as well on next week headlines, because this week was slightly different because we've got an interview extract from our friend of the podcast, Derren Martin, and he's obviously going to be talking through the what's been happening in September trade figures, and you may be hearing and seeing kind of a bit of a firming up in values, a little bit of positivity around EV values, but I won't ruin that interview with Derren, and like I say, partway through today's show we will share that extract with you.
Yeah, but before we get to the headlines, we'll just go back to a story that we covered last week, which was about Vospers of Plymouth. We reported on their full year financials, but we just want to clarify a few points because I think the report that we were quoting may have got a few bits and pieces in the wrong place. So we're going to single out Motor Trader's coverage, which showed that the full year pre-tax profits fell 67% to 2.2 million on turnover, which was up 7.2% to 270 million. And that's for the full year to December 2023.
Yeah, so I think the initial reports that we shared last week were incorrect in terms of what the figures they were looking at. So actually not as bad as initially was reported there.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Headlines this week come from AM, Motor Trader, Car Dealer and Auto Retail Agenda, starting with car supermarkets set the pace in September as online searches for used cars hit a new high for the year on Motors. Why Cox Automotive believes it's time to move past the agency model's false dawn. Thurlow Nunn acquires Lings Hyundai in Lowestoft, and we'll close the show this week with the latest full-year dealer group financials from Listers and Eastern Western Motor Group.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
To get the show underway, here's an extract from our chat with Cap HPI's Derren Martin talking about how trade values performed in September.
So, I mean, we'll get on to our regular sort of what's been happening in the sector, and interesting time, as Curtis said there. Now at the end of the third quarter, heading towards that sort of autumnal period of the year, the fourth quarter at the end of one of the second biggest plate months of the year with September. But let's start as usual, taking us through the headline trade figures at that 3-year 60 mile point, which has been up 0.2%. And how does this fit with on the year to date and compared to previous movements for that same period?
Yeah, so it's a positive of 0.2, which is, I mean, it's relatively unusual, isn't it, through the course of a year to get an upward movement, but it's not actually that unusual for September for movements to go, for values to go up. So if you look at sort of averages over the last sort of 10, 12 years since we introduced Cap Live, it's generally, if you look at the overall average, it's flat actually this time of year, but that does include a sort of a drop of last year when it was quite a hefty drop. So it's generally a fairly a level month. You can have a sort of a 0.2 up or a 0.2 down or level over the last sort of 10 or 12 years. So it's been good. I think the difference this year is that we've had a really strong build up to this as well. We've had what we've sort of been calling the summer of strength, summer of stability, however what you want to call it. In previous years, you don't necessarily have that. You have sort of small drops, but every month this year has been a more positive movement each month than the seasonal average. So there's a shortage of vehicles in the market because of the COVID year of 2020, then dragging into 2021 with semiconductor crisis, low new car registrations. So 3.1 million less over a 4-year period than over the previous 4-year period has meant that 3 and 4 year old car has been low in numbers, which has kept values strong. And along with strongish demand from retailers who are all doing pretty well, that's what's keeping the market buoyant, and hopefully it will carry on. So yeah, it's been an interesting time, and I think when Dylan and I did the podcast last month, he did predict a small movement up, and I predicted a small movement down. So all credit to our forecaster there.
I think it's a very marginal movement. We'll call it level, shall we? I think it's very small, but I think in terms of we talked last month around that sort of the holiday period and that sort of time of the year, and how did September pan out in terms of throughout the course of the month within your live data? Because obviously we always talk about the snapshot of a time of the month, but actually that period throughout September, as the market kind of started to recover or return to the sector.
Yeah, I think we saw a small movement down last month, and that carried into the first days of this month. So I think it went to sort of 0.2% down after the first week or so, and then it slowly started to recover, but very slowly. So it's been very stable, I would say. Obviously, there's lots of moving parts within there, as we always say, but overall, it's been strong throughout the month. We've seen really strong conversion rates at auction, sort of 80% plus. We've seen the fleet cars are the ones that are selling the best. Some of those that sort of the retailers sort of unwanted cars that they put through the block have been less desirable, but even those have been selling as well. And that's the sort of a theme that we're seeing. Those grade 3s and 4s and 5s at auction, they're selling. Vendors sort of coming to the party on those and realizing they need to sell them. So it has been kind of strong across the board, but it has gradually improved as the month has gone on, but only very slightly. I mean, in 2021, living through that, the values were going up every single time we looked. It's been a lot more stable for a month. And as I say, it isn't unusual for September to do that. The volumes from the new plate that get generated, so part exchanges and fleet returns, they tend not to hit until later in September and into October. So there's not a lot of volume around, and demand has been strong, and dealers they're not overstocking. So when they sell a car, they need to go back in and replenish it. So that just keeps the market ticking over nicely.
And as you say, Derren, it's a small overall movement for the month, but were there any notable trends across the different age bands?
The weakest age band was actually at 10 years old, but even that was a very negligible movement down, and that has been sort of the weakest age band throughout the year, but it only dropped by 0.4%. So that's really strong, especially when you look at those cars being lower value. Apart from that, we had a 0.1% increase at 1 year, and 0.2% at 5 years. So it's been fairly similar there, really. So it's been strongish across the board. I would say. Well, we'll talk about electric vehicles, I'm sure. Slightly more pressure on the newer electric vehicles, because they compete with those new car offers which are being pushed by manufacturers with the ZEV mandate target in mind.
So as always, it's a great interview, and always great to chat with Derren there. So that was just obviously a little bit of a brief extract from that interview that would have been in your podcast feed on Friday this week. And so, if you haven't had a chance to listen to the full interview with Derren, then I do urge you to go back to your podcast feed and have a listen to the full interview. Always great to get the context and the detail behind some of the headline figures that you may be reading from the performance in September, and more importantly, his view on what expected to come, obviously, as we head into the final quarter of 2024.
And staying with September and used car trends, heading over to AM Online, the headline there is Car Supermarkets Lead September Sales with Quick Turnaround on Reduced Inventories. So this is the latest market view analysis from Motors, which I did help the guys with the press release on this one. So I did see the data, and it's actually really fascinating. They picked out some key trends across the sector, and September looked pretty positive in terms of activity, what buyers were doing, what customers were doing. There were buyers in the market. Motors reported the highest level of traffic for the month, for the year, over the course of the month. And car supermarkets, as the headline says, very much led sales with quick turnaround on reduced inventories. And what Motors was saying was that this really demonstrates some of the retailing efficiencies that we saw in September. So achieving rapid sales despite reduced inventories. So cars at supermarkets averaged just 20 days in stock. And that was significantly outperforming the market average, which was 29 days. And inventory levels at supermarkets dropped by 5% month on month to 258 units. And this is after a build-up of inventory over recent months. But the segment still managed to grow month on month sales by 4%. And the only retail sector to do so, to grow sales month on month. So, really a big shout out there for the efficiencies that we're seeing in car supermarkets.
Yeah. And as you say, saying that obviously there that a strong month in September, obviously talking about those new highs for 2024, up 10%. Month on month and 12% year on year. But it does reflect on some of the conversations we've had previously with Derren at CAP HPI and other reports that we've been seeing, that the majority of the searches were for cars in the 5 to 10,000 bracket and the 10 to 15,000 pound bracket. So really showing where that focus is from the consumer in that more lower end price profile of profit. And as you said there, Curtis, I mean, for the overall, saying obviously about the entire market remained fairly level in terms of stock levels. That the average was 51 units compared to 52 units in the previous month of August, but remained unchanged year on year.
Yeah, and in terms of stock levels, as you say, franchise dealers saw a slight dip in stocks from 60 to 58 units, but I don't think we're seeing the impact of part exchanges, which tend to be felt, as we know, towards the end of the month. So we would expect to see those in October.
Yeah, and as always within the market view, there's lots and lots of details that we always urge any listeners that if you know you're not viewing that on a regular basis for the detail, then we do urge you to do that, because obviously there's everything around, models, makes, models that are in demand, etc. But more importantly, at the minute we talk about fuel types a lot, and particularly battery electric vehicles. But EVs did see their prices increase for the third consecutive month, up 1.5%. That was an average of £408 month on month to 28,180, though still 14% lower than September at that same time last year, 2023. Hybrid vehicles prices dropped by 1%, equal to £180 to 25,546, whilst petrol it was 16,662, and diesel 14,937 remained fairly stable compared to the previous month of August there. So lots of detail in this, as always, isn't there, Curtis?
Yeah, definitely, and probably last point on this particular story, because I notice I know that Motors were looking very carefully at the market segments, and large cars proved to be in demand, quite popular over the course of September, especially estates, which is a segment that we don't actually talk about that much, because a lot of estate buyers have drifted into SUVs. Now, SUVs were strong in September, but estates were particularly popular, and they're attributing this to parents preparing for the new school term, with this segment receiving some of the highest views per vehicle. So, as you say, Phil, there's lots of stats in this, and what we'll do is we'll put a link to the AM story, but also the press release that Motors put out during the week.
Yeah, and Lucy Tugby, who you've heard on the podcast, marketing director at Motors, sums it up fairly succinctly there, that September market view reflects continued stability in used car pricing, stock levels, and days to sell, all positive indicators for dealers despite ongoing economic uncertainty.
So moving on to the next headline, and it's from Car Dealer, and the headline is "Time for Motor Trade to Move Past Agency Model False Dawn," says Cox Automotive. So this is a fascinating one, Phil. I know you were heavily involved in this story, because it's based on the Cox Automotive, the latest Insight Quarterly, and a lot of the conversations that you're having with Steve Young from ICDP, who we did an interview with only last week, and Steve is really looking at the impact of agency now that it's starting to bed in for some of the brands.
Yeah, and as you say there, this is we do the Insight Quarterly, and Steve is one of the main contributors within that report. And say, agency is this we've talked about it for a long time now, and I think Steve's sort of saying, it's time to kind of move on from agency and talking about agency in its truest form now. Although I must admit, we have got a story at the end of today's show.
I don't think we'll be moving on this week, will we?
we can't move on from it, but we will be referencing that at the end of the show there. But yeah, I think very much is to your point there. From the chat recently with Steve, this is very much now about hybrid views of the market, how they are now starting to bed in. We know that some OEMs have already gone to agency, and there has been some pain points for those OEMs that went fairly early to a form of agency model, but they are coming through the back end of it. I think the reports are that I think with some of the challenges facing the sector today, some of the dealers are quite happy in the agency space, because some of the problems aren't their problem, it's the OEM's problem, which I think is a first for some of the dealers at the minute, Curtis, that they can say, well, it's not my problem, this is your problem, not mine now. I don't need to worry about that side of it when it comes to new car inventory side of things. So yeah, it's really going through that a little bit, but again, it's certainly not gone away. It's certainly going to be returning very much to the headlines at some point, but yeah, very much now more of a hybrid approach from the dealers and the OEMs.
Yeah, and there's an interesting comment from Steve within the piece, because he does actually make the point that there's no such thing as a sort of pure agency model. It's really what, as you say, what is working for the OEMs, and they will adjust it accordingly. So he does say in the traditional franchise model, manufacturers wholesale vehicles to dealers at fixed prices, which of course we know. Dealers then use some of their margins and OEM support to secure sales. While this approach has its inefficiency, it also brings certain advantages. So it's really highlighting that the old model, it had its fault, but it wasn't broken. So agency as a direct replacement isn't going to work for each and every brand.
No, I think that's been clear now. I mean, some of them are obviously still working on how they're going to transition to some form of an agency hybrid approach, and that's clear. Some are certainly still sat on the sidelines observing at the minute, and others are basically saying it's not for us at this current time, and they'll review it in due course. So I think I think this is something that is going to continue over some years, Curtis. It'll keep me and you busy on a Saturday morning for a few years yet, talking about this one.
Most definitely. We'll be back with the rest of the week's headlines after the break.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
So heading over to AM Online now, and I know this is a story that you may have been involved with, Curtis, from Judge Service, involved with some research saying that dealer websites lead as top destination for new car buyers.
Yeah, this is the research that Neil Adley at Judge Service and the team have been working on for their annual State of the Nation report. And this part of the research really looks at how engaged buyers are with websites and where they go specifically for information on new cars. So the polling covered just shy of 5,800 buyers, and it found that 54% of those respondents rely on dealer websites as their primary source when researching new vehicles. Now, Auto Trader followed in second place at 27%, with Carwow coming third at 9%. And these top three rankings actually remained consistent year on year. Manufacturer websites, those still in fourth place, saw a slight dip in popularity from 8% to 7%. So it really is highlighting the importance of those dealer websites for new car information when buyers are in the market. And of course, very timely as we're at the end of the plate change month.
Yeah, definitely, and Neil does comment in here saying that dealer websites are still the first port of call for most new car buyers, significantly outperforming other platforms. That he does stress the importance of dealers maintaining up-to-date websites that showcase their latest offers, as the details resonate with active buyers. So yeah, very much supporting those dealer websites and etc. And to Neil's point there, highlighting the importance of maintaining your website to keep everything up to date, because that is the port of call for consumers.
And next headline is from Motor Trader, and we got another acquisition, Phil. This one is from Thurlow Nunn. So the headline is Thurlow Nunn acquires Lings Hyundai in Lowestoft. And it's really following this trend that we've seen over quite a few months now of dealer groups cherry picking certain sites, these one-off purchases. Now, the attraction for Thurlow Nunn of Lings Hyundai, apart from it being a well-established business there in Lowestoft, is that it's got the Hyundai franchise, which Thurlow Nunn didn't represent before. So this is their entry into Hyundai. And as I say, very similar to a story that we reported on, I just think a couple of weeks ago, John Clark bought a Kia dealership really to get them onto the ladder representing Kia.
No, you're right. I think this is what, we've cited this a couple of times now, that this does seem to this change now that some of these OEMs are picking and whether they're selecting or the retailers are selecting that OEM and starting to sort of move around a little bit. So we're seeing OEM retailers exit certain brands, may even be exiting the sector in its entirety, and the OEMs sort of selecting other partners to move into. So again, like we saw with John Clark, like we're now seeing with Thurlow Nunn, I very much doubt this will be the one and only Hyundai business. You can see where Thurlow Nunn is I know the guys at Thurlow Nunn very well. They're a very well run, very well respected operation, and you can kind of see where Hyundai fits in with that business, and it probably, I suspect, won't be the last from that franchise. I suspect Thurlow Nunn will want more, and Hyundai will probably want more representation from Thurlow Nunn. So as I say there, that's Thurlow Nunn now that to represent, in addition to Hyundai, they've got MG, Peugeot and Vauxhall. So moving a little bit away from that Stellantis brand with the Peugeot and Vauxhall, and now moving into other areas for that operation.
Yeah, and it is probably worth just pointing out that Lings, it's a long-established business there, operating across East Anglia, Norfolk, and Essex. But its main strength in more recent years has been in motorbikes. So it has a network of motorbike dealerships, including Triumph, and it looks as though that's where it's going to be focusing its energies and attention in the future.
And the final two stories, as Curtis said, moving into some financial performances, and we are seeing a lot of these recently, as we've been highlighting. And the first one we're going to go to is over at Car Dealer magazine. Listers becomes the latest car dealership to see profits tumble as shrinking margins hit, saying that Listers Group posts annual accounts for the 12-month period, and that's until the 31st of March 2024, saying that the firm sees profits cut in half despite an increase in turnover, and that retailers sold more vehicles than last year, but margins fell to 14.1%. So I don't know, it's kind of a similar story that we were talking about last week and probably the week before, Curtis, that, we're starting to see some of these financial performances come out either for year endings to the end of December 2023, some of them into that first quarter of this year, fewer till the second quarter of 2024, but very difficult now because you're comparing exceptional years, aren't you? That 2022 was an exceptional year for profitability for dealers, and 2023, I think there's not many dealers that probably went into 2023 expecting to do the same. So we are starting to see the results of that. So I think sometimes this kind of thing needs a little bit of context behind that, as we said last week.
Yeah, most definitely, because when you compare 2022 with 2023, you're not comparing like for like. We need another normal year, but 2022 was an exceptionally
I don't think we've got one coming for some time, Curtis. I don't think we're out of normality years.
I think those days are long gone, aren't they?
They are, yeah. I think we lost them a few years ago.
And moving on to the last story for the week, and it's another full year financial, and it's from Auto Retail Agenda. And it's kind of a fairly similar story, and this is about Eastern Western Motor Group, saw profits before tax fall from 24.9 million to 18.9 million, and that's for the year ending December 2023. Turnover, however, grew from 810 million to 857 million. The directors nevertheless pointed out that the turnover is down £50 million in its Mercedes-Benz division, and that's due to the shift to agency in January 2023. So that would have been the full year under agency for Mercedes-Benz. And they do actually make the point that we now receive a handling fee instead of invoicing the new vehicle. And they said the overall reduction in profit was down to general inflationary pressures, along with the costs associated with developing and opening 3 new Toyota sites and a new Lexus site. So clearly, a busy year there for East and Western. And again, we're talking about that comparison between 23 and 22.
Yeah, and as you say there, the reference there to agency and the in terms of their transition within that Mercedes division, I suppose within this, there are reports that some of the ones operating in that space are saying that they're quite happy at the minute because there is a lot of volatility, and it's they're quite happy that it's not their volatility, it's somebody else's volatility that's being felt. But I suppose it all depends on how profitable you were as a Mercedes retailer before the transition to agency, doesn't it? Whether it's seen a downturn or an improvement, because if they are now seeing that their handling fee is hitting their financial performance, very much depends on how profitable they were pre the transition moving to a handling fee. So again, very much, it's not like for like with this kind of thing, is it, these days? I think we're seeing a change in the market, but we're not going to drop agency for some time, are we, Curtis? So
no. Having said we'll move on, we won't. We'll be returning to it fairly soon, I'm sure.
We will. So I think a couple of I think we'll as we move through financial updates, I think it'll start to move away from that 2023, and it'll be more looking at the sort of Q1, Q2, sort of the different financial trading period for those retailers. Very much now waiting to see what happens in the month of September, which we'll see which manufacturers are on target for the ZEV mandate and which ones have maybe got a little bit of a gap to catch up in the fourth quarter. But hopefully you've enjoyed this week's headlines. I say Curtis unfortunately won't be with us next week, but fortunately for Curtis, he'll be out enjoying the winter sun somewhere else. And say, I'll be joined by Kyle Davis. And as we said right at the start of today's show, if you've not listened to the full interview with Derren Martin from CAP HPI, sharing the trade figures and performance within the month of September, but more importantly, sharing his views as to what to expect over the coming weeks and months for the sector, please do catch that in your podcast feed.
That's all for now. So many thanks for joining us on the Motor Trade Radio podcast. Until next time, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.